Hey, welcome to the Airmere Roundtable. Today's the first day of summer 2023. So, backstory: I did Optionetics a long time ago, over 20 years ago, and it did a nice advanced seminar in Vegas. And two famous guys were teaching it, George Fontanelles and Tom Gentile, and one of them is right here today. So, Tom, it's been a long time since I've seen you in person, or actually even connected with you. So it's nice to have you here. And one of the reasons I asked Tom here is back in the day, I was using the Optionetics platform for option analysis. And as we're all aware, OptionView recently ceased operation. So everybody's looking for different alternatives to analyze option trades. So Tom's still has that old Optionetics software going and has improved it. And I thought it'd be great if you could come on and show people what you've got and give people an alternative to OptionView for those who are using it, and people are using other tools like Option Export, et cetera. It's always nice to have another available thing to shop around and see what fits your needs the best. So, Tom, thank you for coming on, and I really appreciate it. Yeah, welcome.
Absolutely. Thank you, Tom, for inviting me. And, when I first got the call, and I heard the word option view, I was like, wow, there's something I haven't heard in a while, because we all kind of get used to our own, set of shoes in the when it comes to analytics software. And option view, I'll let you guys know this. It was the very first option software product that I ever tried. It was option view. And then when I worked on the floor of the Amex, we also used something out of Bloomberg. We used the Bloomberg terminal, and there was another product we used too, which was part of the Bloomberg terminal. But we were talking, it was costing us $1,600 a month to rent that terminal. So OptionView was a much better, it was so much more, it was cheaper. All right. It actually hit the budget much better as a retail trader. So when I came off the floor of the Amex, OptionView is where I went to. My history, and Tom, you know this, but I'll share it with the group. So I started trading. This was in 1986. And I'll just give you the quick notes. 1986, I first started trading. 1987, boom, I'm cut. I literally got my legs chopped out from me on Black Monday, and so I had to come back and decide whether or not this is something that I wanted to do. And lo and behold, I met a person who worked on the American Stock Exchange, and I ended up going to work for his company. And I left a good IT job to go do this. And so I'm up there and I meet this guy named George Fontanelles. I see him. He was at the American Stock Exchange and he had a spot that was, a lot of these exchanges, you've got your floor and then you've got your upstairs trading. And he was upstairs. And so I'll spare the details on how I met, but he and I got to become good friends. And, that friendship turned into a company called Optionetics, where I, and two other partners had formed this company. And what we did was, actually we formed it, Tom, just to give us something to do outside of the exchange. And, when you're down in the exchange, there's a lot of yelling and screaming going on. There's camaraderie within the group you're trading with. Everybody else is the enemy. And so we used Optionetics as a way of getting out of the floor and getting with normal people. And we did it like once a month. That was all we were doing. And so Optionetics went from once a month to once every other week to once a week. The demand for folks that wanted to learn how to trade options, even back then, and I'm talking about going back into the 90s, was incredible. This was prior to 1995. Now, also, as you know, the internet really was being born out of the mid 90s. I mean, prior to the mid 90s, what did we have? CompuServe. That was pretty much anything. That was something that at least me as an East Coaster would do. I wasn't Silicon Valley. I wasn't with the Mac group or the Apple group at the time. The best I knew for programming, and I wasn't a programmer. I'm not a programmer, but I tinkered around a bit with with basic and business basic, and then after that, that's it. I'm hiring people, or contracting out jobs if I need something done. So I meet these guys on a news group. Tom, you remember the news groups, right?
Oh yeah, sure.
Okay, so miscellaneous dot invest dot options is, and I saw that. I saw the futures, I saw the stocks, and I met these guys that had this little. I called it an app at the time, application, before app was even a cool acronym. And so I said, "Wow, you guys got something really cool. I'd like to work with you on it." And then I introduced them to George, and then here we are. We had from Amex to Optionetics to, we needed something that would really flow well with the style of teaching that we did for our retail traders, because they couldn't afford Bloomberg. And we were playing around with OptionView, and it was great with risk graphs, but its search capabilities, you remember, back when it was a DOS program, its search capabilities were limited. And we wanted something that anybody, it didn't matter whether you had a Mac or you had a PC, you could just go online and get it. And so we were using this with, I'm trying to remember, Netscape Navigator, I think, was the very first thing we were using this with. And anybody could download Netscape. It was free. You didn't have to pay for it. So here we are with options analysis, and then fast forward to 10 years ago, and we created Tom's Option Tools. And Tom's Option Tools is a cloud-based options analytics software, but it's so much more than options analytics. I'm going to show everybody. We're going to open it up here in a minute. Just give you an idea. The team behind this is the same team that we had back in the 90s that created the options analysis platform. These are ex-NASA, ex-Raytheon scientists. I call them scientists at the same time. That's their official term, although I laugh about it. But these guys hold over a dozen patents between them, and their specialties are in mathematics and missile guidance technology. So we're dealing with the right group when it comes to creating option software. We've been together now over 30 years, and so it's been over half of my life that I've known these guys, and they're obviously getting up in age as I am, but still, I love what they've put together. Our group loves what they put together. We have thousands of people, and I'm not talking tens of thousands. I'm talking, a couple thousand people that are members of our software. And so let's talk about what and one more thing I want to mention is that, you had mentioned to me before we came on about OptionView. A couple quick things. OptionView, I don't know what the latest version of the OptionView look like. What we did was we held our software kind of true to form. It hasn't changed that much since 1995. In fact, we're still using the Unix platform, Tom, that we used back when you used it.
Linux is pretty solid.
It is. It's one of the most solid operating systems that's out there, and it's just we don't deal with things that typical software firms deal with, like hacking, for one thing. It just doesn't happen. And so, we've been really blessed to have a good, stable piece of software that I call our software sleeper software. So a sleeper, if you've ever heard of the term sleeper car, it's a car that might come up next to you. You don't know what it is. It's nothing special, but when the guy hits the gas, he's gone. And you're like, wow, what the heck has he got under the hood? And we like to think we have the sleeper software in terms of what we have under the hood. And I want to share that with you guys. One more thing I'll mention before we move on. And I'm planning on, I don't have a PowerPoint presentation. What I thought I'd do with your group today is let's just trade. Let me show you what it is that this does. And we'll scan and look at some of the markets today. And I'll show you some of the scans that I use. And I'm a simple guy when it comes to trading. I mean, we have some elaborate stuff in our software, but I'm a pattern guy. I like patterns in the stock market. I like patterns in the option markets. And I'll share with everybody a couple of ways that I look at these things right now. So we are in the process of merging with the Hub Group, which is a company out in Australia. And this was the same firm, and I've known them since the early 2000s. And so what we're doing is we're basically adding a paint job onto what we have here, which is our option software. So I'm going to share another screen with you. This is what our software looks like, Tom, when you're first coming into it. So it's tomsoptiontools.com, and you come in and you log in, and I'll let you talk a little bit later about a special rate that we have for the option view crowd. But once you've passed the login, this is where we're at, and we kept it pretty simple. And let me just share with you really quick what it is you're looking at here. So this really kind of looks like a grid. At the top, I've got every known place you can go through our software. I'll get to the more elaborate ones in a moment. But here we have different levels that people come in as members. We have our option trader level. This is our our least expensive level that goes into our options. This is basically, if you, Tom, you remember options analysis. This is basically all the options analysis piece right here. We've upgraded it a bit, but it's the old finding trades, searching for trades, scanning for trades, back testing trades, etc. is all right in there. We do a newsletter every week, and our newsletter focuses on, let's see if I'll show you the most recent one here. We had Fed Day. What we do is we focus on some stuff like what's going on in the four corners of the markets. So this is the S&P, an outlook on the S&P. We talk about three levels of price that could become support. So we kind of give an idea of where the overall market's going. And then I focus on a specific piece of the tools. So it's a good read. A lot of people like this. These are all available. We have every single one of them available here on our site. Let me go back to our tools, get you back to square one. But again, all of our option tools sit here. This is something called Darknet analysis, which is a contrarian trading pattern that we use. This is our seasonal trading pattern, and these are stackables. So, if you subscribe to Contrarian Trader, you also get Option Trader. If you subscribe to Complete Trader, you get everything to the left. Now, over here on the right-hand side, we have something called our Partners and Masters. So I've teamed up with a lot of our ex-Optionetics group. Okay, so I've got Joe Contes, I've got Jay Harris, I've got Jeff Beamer, I've got Mike Wade, I've got Rob Roy, I've got over half a dozen different Optionetics instructors in the past where they've taken on a specific area that they like in terms of trading. Like Jeff Beamer, for instance, he's really a delta neutral trader and loves calendar spreads. So that is his specialty. And so you can go into our and become part of our partners or our mastery courses, and you can follow a specific trader based on maybe his style and your style fit. And we have some premium level classes. These are live classes. They're recordings. They also come with that individual instructor's scan. And that person has spent time with our programmer and created scans that fit his and her trading style. And so we have those, and that's something we offer once a year. So once a year, you'll hear from each of these folks, as part of our options and now, our Tom's Option Tools community, if you wanted to follow along and get more proficient in a particular style of trading. I'm not going to talk about this today. This is something that we do time to time with our members. But what I want to talk about is kind of the way I trade. And so I have I have taken a three-legged stool approach to trading. And that's spotting opportunities, creating alternative risk trades other than buying a stock if you're bullish or shorting if you're bearish, and then planning, executing, and managing those trades. And I wanted to spend, the bulk of our time together really getting into those top two. And so we talk about spotting opportunities. One of the first things I do when I come into the software and I log in is I'll hit those four corners of the market. And you don't have to do this every day, but I'll do this every week. So we have in our charting, we can look at statistical volatility charts. We can look at stock charts. I also look at probability cones and charts as well. And so I want to show you just a few of these. So let's pop in the stock charts right now. Now, for some reason, Marathon Patent is, because this is a stock that I follow, has popped up on the screen. Obviously, those of you in the room, if you don't know, Marathon Patent is highly involved in cryptocurrency. Okay, it follows Bitcoin pretty well. In fact, we have overlays on our chart where if I were to pair this up, let's pair this up to BTC. And so I'm going to come over to the control board, and what I'm doing is I'm turning the pairs on. I'm going to pair it to BTC. I'm going to update this. Now I can take a look and see, what's been going on. So Bitcoin is the black and white candles, and Marathon Patent is our green and red candles. And as you can see, Marathon followed Bitcoin to the downside back here in February, to the upside as we topped out here in April. And so as you can see, Bitcoin's kind of had these higher lows, these higher and lower lows, kind of rolling back down to around 25. Before the last couple of days, we've popped up above 30,000 in just last 3 or 4 days. Okay, this has been because of the recent news coming out of BlackRock that they are in the process of filing for an ETF. Now, if you know anything about BlackRock, the last 256 ETF projects they filed for, they got the green light on 255 of them. They've only been denied one ETF out of the last 256 of them. That's a pretty high rate. So when you see all these other ETFs trying to go for a crypto ETF based on the physical asset, and the SEC said no, no, no. The fact that BlackRock is now coming to the table is really exciting because they have such a high win rate. They've done their homework. Everybody's noticing this, and that's why you're seeing Bitcoin go from 25,000 to 30,000 inside of the last 4 days. And if they succeed, and we believe that they will, I think two things are going to happen. You're going to see Bitcoin trading up around 40,000 very quickly, and you're going to see, the big value buy is GBTC, because GBTC has been trading 30 to 40% discount to Bitcoin. So it's been playing catch up here in the last couple of days. It's very exciting. I'm just showing you this as a chart where we can actually look at the pairs. So I've turned that pairs on. I'm going to shut that off again. What I like to do is I like to come in here and do a couple things. You can see I have Fibonacci on here. That's great. You can get Fibonacci from anywhere. What I want to show you is something that we do. I call it our all-in-one chart. So to show you the all-in-one chart, I want to go to my stock list first. What I have in my stock list, Tom, is I've got the big four, I think, stocks, bonds, currencies, commodities. So we're going to look at SPY, we're going to look at TLT, we're going to look at UUP, we're going to look at USO, and maybe gold. But I want to look at them a little differently. So I've got our fib levels up, which show a great bullish pattern since March. But let's also add on something we call our channel test. And our channel test allows us to look at long, intermediate, and short-term trend channels. And what we look for is we try to look for, in a lot of cases, where the support lines are coming. Now, these channels all seem to be going in the same direction. But as you'll soon see, we'll see some of these that are moving in opposite directions. And we look for those supports or those resistance levels to double and triple stack on each other. Let me show you what I'm talking about. So this is SPY. Here's TLT. Okay, here's a real good example. So with the bond market, we've seen the bond market moving back and forth quite a bit. I've got here bonds down at 99, TLT high 108.51, which is the closing high off the most recent Fibonacci chart. Then we're kind of moving back down. You've got a longer term trend that's been moving lower, but look at the intermediate term trend is kind of hitting some sideways levels. So this is telling me not only does the fib level support look good, but we've got trend channel support it's coming very close to that 99.48 level. Might be a great level as a value trader. Let's move forward and see if we can find some stuff that looks a little bit better. Double dollar cash market right now has had an upswing, and that upswing's been in place since about mid-April, getting a bit of a pullback. But this area here, down here around 27.77 and 27.94, all look like some really good areas of support. Let's check out oil. USO has not been doing what I expected it to do here in the last year. We've gotten a lot of support, but you can see that if you see this this intermediate and short-term area of support, then you've got a long-term downtrend, which is coming very close. It's just telling us right now that 60 looks like a good level of support. Imagine if we can break out above this resistance area, which is around 67.17, then we could see oil run up. And my idea as a pattern trader is oil typically goes higher between mid-February and mid-July. I'd love to see this thing pop above 67.17. I'll go long then with the idea of getting out in about 30 days is my idea there with USO. One more is gold. I don't obsess over gold, but I've been liking it because it's been a very quiet, area. So where do I like it at? I like it where all of this support's happening right down here around 175. So around 175, it looks like a real good. Let me zoom in here, where you've got this short-term support, you've got this longer-term support, all kind of coming together right here below 176.80. Good area to be to potentially be a buyer. All right, this is all just looking at charts. So you'd think, well, what does an option guy got to do with charts? Well, charts are one thing. It's an area where we can go in and analyze, but we also can take this. We can actually start to create patterns and back test with this information. So, Tom, do you follow earnings? You're an earnings guy?
Not much. I do more SPX trading.
Okay. All right. So I'm an earnings guy, and the reason I'm an earnings guy is because when you look at earnings, and I'm sure the group can probably agree here, where is most of the risk involved in trading earnings? I've got access to the chat window, so I can see this in here. Where's most of your earnings? If you look at risk in earnings, where is it? And if you don't know, that's fine. I'll tell you where I believe most of the risk is in earnings trading. It's when you trade through an earnings report. That's your risk, because you're going to have high risk and high reward. So why go there when you can find areas in risk or reward that make more sense? So this brings us into one of the very first patterns that we've created, and that is an earnings effect ranker. And an earnings effect ranker this is something in our stock analytics. So if you go to stocks, we have more than stock charts. We have rankers, and we can do rankings on on all the stuff you see here to the right. From RSI, ADX, etc. I've also got something called Tom's Movers, and Tom's Movers is a list of stocks that are the last 7 days have run their betas are at 2 or more. They actually have a lot of range going on, and for option buyers, that's what you want. You need a mixture of stock price movement that's greater than implied volatility movement. And again, I don't want to get too confusing here by throwing big words out, but these are different things that we look at. But down here at the bottom, I can actually look at something called earnings rankings. And earnings rankings will tell us simply, you could look at fundamentals. Which companies, say in the last 8 earnings, have had the most beats? Which companies in the last 8 earnings have had the most misses? And that's where we take fundamental data and we actually can integrate it into our technical data. Not a lot of software companies or software products, especially option products, will allow that. Now, I'm going to get to in a moment why this all makes sense as an option trader. So if I go to stocks and stock analysis, I've got analysis on everything from, I do high-low analysis all the time, Tom. I find that stocks that are hitting 52-week highs make really good call buying opportunities. And stocks that are hitting 52-week lows, if their fundamentals make sense, they make good put selling opportunities, because the vol's usually high on the downside and the vol's usually low on the upside, so long as you're not coming into an earnings report. But when we get into earnings, we look at something called earnings effects. I mean, I have things on here like gyrations. Gyrations are channels where, you're looking to buy the low side of the channel, sell the high side of the channel, and we can scan for those. We can scan for those stocks. For instance, let me pop over here. I don't want to lose my train of thought, but if I pop into stock analysis and I go into gyrations to give you an idea, I can look at things like inside parallels, outside parallels, inside closing, outside. These are all different type of channels, folks. So if I want to take a look at, let's say, the S&P 500, here's a list called, and this is program list, S&P 500. I'm going to run that and I'm going to see, show me the stocks, and this is how fast they come up, with that are staying inside a parallel channel. So public storage has popped up here. And so that means that if I go across here, I can see where it started, its close, where it ended its close, its percent range, okay, where it hit the center line, and how many times it crossed that center line to the upside and the downside. Basically, if I snap a picture of it, you're going to see this is a fairly channeling stock, right? VeriSign also. We have these pop-up pics where you can see, where these stocks have channels, and we can set these channels where they can be skinnier channels, they can be greater channels. There's a number of different things, and we even have wizards. You can create your own wizards on channels as well as anything. That's one way to do it. But I want to get back to earnings for a moment. So earnings. All right. So if there was just a way that I could look at stocks that ran up before their earnings announcement. All right. How about that? How about, and we can go in here into our wizards and we can say, all right, give me the price that in the last 4 earnings where we've seen the best change before those 4 earnings. And I want to rank that on the S&P 500. So I'm going to do that right now. And so that's going to give me, it's going to take a few seconds to run that because we're running that against all 500 optional stocks. And what are we doing? We're looking at the price change about 10 days out before earnings, 7 to 10 days. And that's going to deliver us back some information here. And here we go. And so what we know is that, and I'm looking at these, and what I'm looking for is I'm looking for like on semiconductor, and I've got a chart. I can bring up pop-up pics of this. But this is where I want to go. These have had the best closed median percent change prior to earnings. Now, if you notice that -7, Tom, that tells me that this stock fell 7% before that earnings announcement. But the other 3 quarters, up 17, up 4, up 13. That was before the earnings were even announced. What I like to look for are all positives. As you can see here with number 2, this is an all positive. United Continental. So UAL has gone up an average of 10% in the 7 to 10 days prior to earnings. And so let's go take a look at a pop-up pic of that. Let's see what I'm talking about. See here, this is a good 7 to 10 days where you're seeing the stock go from $42, up to that right at that earnings announcement. Here's another one. You could count them back 1, 2, 3, 4, 5, 6, 7, 8. I mean, that's a huge move before the earnings announcement even happened. And so that's what this software can do, is it can go back there and find patterns for you. And you can say to yourself, well, wow, that's great. Why don't I take this list of all these stocks, all right? And we've got, it's a big list, but I can let's just take the first 43 because they all have some interesting double-digit numbers in there. So if we took these 43 stocks, I'm going to take those 43 stocks. I'm going to save them. I'm going to put them in a group called My Stock List. So all 43 of these stocks typically have a nice run up into earnings. Now let's take those stocks, those 43 stocks, and I'm looking for My Stock List. I'm going to re-rank this, and I want to see which ones have had the best IV change coming into those earnings as well. Because as an option buyer, if I'm going to buy call options, wouldn't it be great to know that these stocks in the past 4 earnings, that the majority of the time they've ran up in price, and it also the majority of the time they've ran up in implied volatility. Well, guess what? Of the 43 stocks, here's all 43, but here's the rankings. All right, it looks to me like these top 5, AAP, Match Group, AMD, Ralph Lauren, and Caesars Entertainment, have all had some really nice moves in implied volatility as well. These are IV numbers that run up prior to earnings, that week to 10 days prior to earnings. 33%, 28%, 84%, 10%. I mean, these are all positive numbers right here. So if I'm going to buy call options on any stocks, if I want to do it in earnings, here's a list of stocks that have gone up the majority of the time in the last year in price and have gone up the majority of the time last year in volatility. And the rule is you buy before everyone starts talking about it, and you sell right before earnings, and you move yourself out of the way before the risk comes in. Because we all know what happens after a stock reports earnings. We don't know which way the price is going to go, but the volatility in almost every case goes down. Let me just share with you this. Let's take a look at that same list, and let's see what happens after those 4 earnings with this list. Now we're looking for negative numbers here. Don't have to go far. These are right after earnings announcements. 44% drop in IV, 37, 43, 48. I mean, the numbers are staggering. It tells you right there, you do not want to be holding long premium through earnings, especially if it's a short-term option. So this is just a couple of the things that we can do, with this particular product. We've got stock patterns. I'll show you another stock pattern. This is pretty cool too. We also have cryptocurrency, Tom.
Oh,
I don't know if
nice.
you know that. Yeah,
Yeah.
we've had a cryptocurrency on, so we can look at things like Bitcoin. I've got uh, hundreds of coins we look at, but we can also source them into all cryptos. The cryptos that just trade on Coinbase now it's Coinbase Pro is Coinbase and Bitrex. So we're able to kind of really bring those down to just the most liquid of coins, and we do that because you might say, why in the world does Tom have crypto on an option product? Because of demand from our members. They want cryptocurrency. We give them cryptocurrency. And the reason we put it out there is because we have patterns. We have patterns on cryptocurrency, such as something we call Darknet. So Darknet is I'll show you what Darknet is. So Darknet is a pattern that one of my programmers designed. This is based on channel technology where we look for, again, we're seeing multiple channels giving us support points, and we can have buy points. Darknet is a contrarian trading system. Basically, it means when we're buying when everyone's selling. Also, Darknet is a strategy that we can have 3 different signals in the same direction on the same security before the exit. So you get one buy-in, you get a second buy-in, you get a third buy-in, up to a third buy-in before you stop out. So I just ran the Darknet scan today, and I can see there's a couple of buys that are popping up today. This is Boom Dynamic Materials. Now, when I look at this, here's the last Darknet signals that came. The first one and the second, which was a buy and a rebuy, and there's our sell. That really didn't make any money, but it didn't lose. But it's interesting, it's got a buying opportunity that popped up down here today. We're talking about a stock that was a $28 stock that's now trading at 16. That might be a value buy. I would probably want to, if I like this, I'd probably want to see, by the way, every stock we're looking at here, folks, is optionable. So I would want to see what the implied volatility was on those options. Maybe I sell puts if I like this particular security. Now, Exxon, I know really well. Full disclosure, I'm long Exxon. And Exxon has had, if you notice here, here's a bullish signal. Here's a bearish for a couple of points. Here's a Darknet buy. That's down here below 100. Here's a Darknet sell up at 114. Here's a Darknet buy today that occurred. And that occurred around 103. So you can see it's already kind of off to the races. Darknet's typically about a 30-day on average trading strategy where we buy, it's a buy and hold on average of 30 days. It is contrarian. It is also part of the Tom's Option Tools product. I said this in Optionetics. I don't remember if you heard me ever say this, Tom, or any of you that are here that are Optionetics students. Maybe you've heard me say this. I remember saying this in the late 90s. I remember saying this after 2011, and I'll say it again now. I don't know if I'm going to say it word by word, but here's something that came from my lips. I said, if you cannot make money trading stocks, if you lose money trading stocks, then in most cases, the only thing options are going to allow you to do is lose money slower. And I say that because I think truly, and those of you that are option view traders, this, okay? You're looking for objective trading rules. You're looking for something that's not subjective, not meme trading, not emotional trading. We want that rinse and repeat, as boring as it can get strategy, because boring works in this business. Excitement does not work in this business. So I'm kind of coming along here. I see Exxon on the list. I saw, here's Fang, all right, and that's not Facebook, Apple, no, that's the energy company, all right, Diamondback Energy, there it is. Darknet buy signal, it popped up on Fang today. I looked through here, I saw quite a few in the oil and energy section that was popping up here as buying opportunities today with Darknet. Now, how do we know, how can we go back and look at Darknet? We have a way of backtesting. And so I'm going to show you some of the backtesting features right now. Now, keep in mind, backtesting works on the majority of stuff that we have, not just stocks and patterns, but even in option. We have option trades and option scans where we can run backtests on them. But here, I'm going to click on Darknet stocks for a moment. And I'm going to bring up my Darknet 400, which is the top 400 stocks we trade Darknet on. And what I can do is I can go in and I'm going to sort these by percent winners, but I can sort them by math expectation, return on investment. I can go back. Now, here's my back test date range. Okay. I'm going to go back 2,500 days. All right. That's 2,500 trading days. So that's about 10 years, I believe, of option data that we have, up to 10 years. There's some stocks that haven't been trading options for 10 years, but I'm going to go ahead and click on search. And I don't know what we're gonna come up with here, but we'll check it. Now, what it's doing is it's running a search on every stock that had a Darknet buy, a rebuy, which is the second signal, a stop, an add-on, which is the third signal, and a stop, which is the exit. So as long as we have objective trading rules for getting into and getting out of something, we can backtest those as long as we have data. All right, let's take a look and see what we got here. So this is the Darknet trades that we're seeing on those 400 Darknet stocks. This is going back 2,500 days. 83% of the stocks made money. So when you look at that summary, that means that 80. So when you look at stock, the stock had more than one signal. If it has one signal or more, if it had one signal in 10 years, it's 100% accurate. Okay. One of the reasons I like to go back 10 years is because in most cases, you're going to have trades that have multiple signals. This tells me that 83% of these stocks on average were winners over time. And that a little more than 16% on average were losers. That means that the Darknet signals winners and losers posted a loss for that stock. Now, on a percent profitable per trade, 71% of the trades were profitable. Another thing we like to look at is max expectation. And that's, in this case, $751 positive. Positive number is great. Average profits, $13.36. Okay, average loss, $6.86. That's where we come up with our math expectation. Our reward to risk ratio was 1.9 to 1. Now, I want to make sure everybody understands something, because you're seeing max profit 53,000, max loss 35,000. That's based on a $20,000 risk. Okay, we can raise and lower the risks any that we want, but keep in mind I just did an analysis on stocks, not on options. Okay, so when I come down and I can actually start to see some trades here. Here's 11 trades on Murphy Oil. All 11 of them over the last 10 years were winners. The average days in the trade on average was 40 days. Okay, now look at the ProShares Ultra Pro Dow. Only one trade in the last 10 years. All right, so what I can do is I can throw out those onesies, and that way I can come up with a more competent list. Now, just like I'm throwing out the ones that are winners, there may be some ones down here at the bottom that were losers. So all the way down the bottom, you can kind of see, all right, this is 3 trades, 33%. You know, I'll kind of pop through and I'll try to find those ones and twos. There's a 2, American Airlines, 50-50. But you can see that, you know, anything above 50%, we're talking about 373 stocks out of the 400 were better than 53% on win to loss. And, you know, we got some up here that move through the pattern quite well. So this is, again, not even getting into options. All we're doing is we're just talking about particular patterns we have. Now, the other thing too, Tom, this is something that we do that I don't know of any other software company that does this, but we can actually backtest on options. And so in order to backtest on options, you actually have to have the raw data. All right. You have to have, when I say raw, what I mean is that it has to be before split data, because once something splits, it can change, you know, it changes that option price and it'll change the mathematics. So we keep the before split pricing. And so, and we're able to, with our software, be able to adjust for the split when it actually does happen. So take a look at Darknet calls. So now what I can do is I can run now, in this case, we had 2,500 days of stock data. I have 1,500 days of option data. So I can run the same exact piece looking at the last 1,500 days of option data. You know, probably would have been better if I started with 1,500 days of stock data so I can compare the stock wins to the call wins. But I'm just going to continue to move on here. So we're going to run a search on those Darknet signals and see how the calls performed in the last 1,500 days. So here we go, and this is running, and I can see it's running because I've got an elapsed time happening over here. And this will run for up to 30 seconds. And if after 30 seconds I don't get a response, it'll show me everything is collected so far. And it'll say, do you want to continue? And I can hit that continue button. Looks like that might actually end up happening in this case. Let's see. Yeah, so in this case, I can continue and it'll just add on to what I have. But let's just look and see what we've got so far. All right, in this case, we have 57% of call trades were profitable. 71% of call trades on the same stock were profitable. The math expectation's positive, that's good. Now, look at this example. We're looking at only $500 risk per call. So we could be leaving a lot of call options off the table by doing that, but I'm just going to go with what I have here so far. And you can see, again, we're running them by percent. Here are 12 trades on Philip Morris, or on PM. By the way, PM is actually showing a trade leg, and this tells me that there's a recent trade going on right now that we could look at with Philip Morris. But the last 12 of the last 12 trades, or excuse me, 12 of the last 13 trades, 11 of the last 12 trades are positive. I see a 92% win. And last trade was looks like the last bull date was 6/2, June the 2nd. And right now that's showing a $660 profit, open position profit in the last 19 days. So that's based on that Darknet buy. Let's bring that up and I'll show it to everybody. There it is. There's the Darknet buy on Philip Morris. There's the last 19 days that we see. And that shows, based on that call option, that July 14th, 95 call is up about $660. Pretty cool that we can do that. Let me show you one more. How about spreads? Let's look at call spreads. Let's look at call spreads on the same exact scan going back 15 days. Let's see if call spreads helped increase the percentage. I hear a lot of people say, I hate call spreads. I don't like them. You know, why don't you like them? Because you need to move up an extra clearance level? Or is it because it's a little complicated? You know, to me, I will like or not like something based on results and results only. And so what we're going to do is we'll take a look at this first 30 seconds and see what we come up with results here. To do this scan, this back test justice, you want to run it all the way out. That's what you want to do. So I'm still waiting for the page to refresh. Let's try that one more time. It might have been my fault. By zooming in and unzooming, I might have caused my own problem here. So let's just run this one more time. Oh, you know what? It just gave me the top 365 days. I want to run this out 1,500 days. I did get a nice, for the last 365 days, 72% accurate, but I want to show you guys what it looks like going farther back in time, because that's kind of important that we do that. So for 15 more seconds. What do you think so far, Tom?
It's impressive.
I haven't even gotten into options yet, into risk graphs. But I mean, everybody understands risk graphs. I'm going to spend the least amount of time on that because it's there. Here you go. So for the last 1,500 days, same thing. Remember, we were looking at 50. It was like 56% on the calls. Well, if you traded the call spreads instead, you would have had 71% accuracy. And to me, that just tells me, okay, that's why I like call options. And I can come down and I can see, you know, the call option trades. Here's all the 100%ers. Moving down BCS, the last call option trade. This was 11 trades on BCS. And again, we can look at the Darknet scan and we can see, wow, okay, here was a buy. Wow, that didn't work out so well, but it had a second buying opportunity down here. And of course, the sell came in. And so, yeah, everything, we can rank things by percent winners. We can rank them by the best return on investment, et cetera. Okay. That's, you know, a way of looking at the actual stocks to calls to spreads to really get an idea of what strategy works best on this particular trading system. Now let's change gears. Let's get out of contrarian. Let's look at seasonals. So this is something I look at a lot. We filed a patent for this years ago. It's called the money calendar. So the money calendar is really kind of a cool tool. And to get to that, let me just take you back to our homepage. So this is what it looks like when we log in again. And if you're a level 3, a complete trader level, you're just going to mouse over and click right on the money calendar, and it's going to show you a calendar. And the calendar actually shows us, so this is June, and here's today's date, June 21st. And if I'm looking at today's date, I see 118 trades. Out of all optional stocks, 118 of them have patterns of greater than 90% or better. Historical trading patterns telling us that if we get into the stock today, going forward, based on what we've seen in time, and this is 10 years, this is a minimum of 10 years back test, I see that 97 of those trades are bullish and 21 are bearish. Now, the other thing that's interesting about this, Tom, is that there's a lot of green in this month. And green tells me that if we go back 10 years, we're seeing that there are buyers. You know, a lot of people are saying, wow, we've had such a great run in so far since March. Is this run going to continue? Well, if seasonality has anything to do with it, yeah, it looks like it does. In fact, let me just move forward into July. Hope we got the data in there. No, we haven't added. I gotta get my programmer to add the data in, but we'll populate July here. Have that populated by the end of the day, and we'll be able to see what's going on in the month of July. So here's our data going into the end of June. Now, if I click on the 21st, all right, thanks, Jay. I see Jay in here. He says our July data is going to be up here very shortly. So what we're looking at is I moved into today's date, Tom. And what I see here is I see a lot of symbols. I see a lot of green on the screen. And then down at the bottom, I see some red. All right, so green indicates the bullish opportunities and red indicates the bearish opportunities. Now, I've got other columns here. I've got net profit. So if I rank by net profit, I see Chipotle Mexican Grill comes up at the top. There's TMO, Land Research, Costco. These are all net profit over the entire scan. I've got accuracy ratings. How well has the pattern performed in the last 10 years? You know, I got stuff on here that's 100% accurate. This 10 for 10, and a lot of it, by the way. Average profit per event. And, you know, here's CMG once again. Ending date tells me when the pattern ends. Today, the pattern starts. We're looking at patterns that start today, but over here, I can see end patterns. Now, you know what this is good for? Because if I look at an ending pattern, I can get an idea where I want to put that option expiration date. You know, how much time do I need? Do I need to go into, you know, can I do a weekly trade here? No. But if I can pop out here and I can see something that, you know, if this ends on July 31st, I can get an option that ends either right around July, the end of July, or something in August. That way I know I'm buying enough time. Power meter is how we rank these the majority of the time. What the power meter does is it's kind of like, I like to call it that what have you done for me lately indicator. And so when I look at something like Costco, here's Costco. So I'm gonna jump into Costco. We're gonna look at it in a little bit more detail. Right now, it's showing that the best time to buy this stock is today. The best time to sell it is July 31st. I see that all this green on the screen. It's gone back, and in the last 10 years, the software has determined, based on all these dates, backwards and forward, the sweet spot to be buying Costco at this time. This is the last 10 years of the results of that. And so back in 2013, the stock was a lot cheaper than it is now, but it made $3.89 during this pattern. But look at the last 5 years, okay? 18, $13.34, 19, $16.30, 2020, $25.01 during this 1 month pattern, 2021, $47.78 last year, $96.86. I'm going to click on last year. That's going to bring up the chart. Okay. Says, as I can see, I mean, there was a little gap in the chart from one day to the next, but this is pretty much a straight up line. How about 2021? Same thing. How about 2020? I mean, this looks really exciting. And yes, this is the seasonal analysis, Rich, that you're asking about. So we can go in here and we can look at all this information, and it can help us determine again, what are the two things option traders really need? Because I'm going to tell you, 98% of all option traders basically buy something because they think it's going up. Okay, but think cannot give you average profits, and think cannot give you average time frame. And so this does exactly that. Because if we go back and look at Costco, we can see that its average profit per trade was $21.11. But that's factoring in all 10 of these years. In the last 5 years, your average profits have been closer to $40. And then we all know when this is going to end, right here, July 31st. So if I'm going to go in, this is probably a good time to start segueing into the options. So if I want to go into Costco and I want to buy, look at an option table on Costco, let's go ahead and look. I'm going to type in COST. By the way, I went to the options and option chains portion, and I'm going to go into Costco. Here's Costco. Now remember, what do we want to look at? We want to look at something that options that end after July 31st, on or after. Well, we got a July 28th option right here. This is an expiration. We've got August 18th. Let's go out to August 18th. That gives us plenty of time to expiration. Also, I like third Friday options because they're the most liquid. They have the best slippage between bid and offer. Let's go ahead and click on that. Now I've got my calls on the left. I've got my puts on the right. Let's look at the call options for a moment. With the stock trading at $520.97 as the last print, all right? Let's go back to Money Counter once again. And remember, this gives me an average trade of 21.11 looking at the last 10 years. But we really kind of focus on those last 5. And if the last 5 years we've come in at around 40 points, that's a good number to go with. So I have an option that has an expiration. I now have an idea that we're looking at an average of a 40-point move. So I want to look up this chart, and I want to go 40 points above 520. So I'm going to be looking at 530, 40, 50, 60. So the 560 is the target. The 560 might be the one I'm interested in selling. I'm just going to throw that out there right now just to begin. Maybe I come down and I buy the 540s. So if I want to put a 20-point spread on August 18th, what's that going to cost me? I'm buying the 540 call. I'm selling the 560 call. That's a 20-point spread. Again, I'm using 560 because that's the target, the projected target we're looking at based on what's happened in the last several years. Come on back up, click on risk graph, and here we go. Here's the risk graph on the trade. $437 risk. You can see that no matter how far it drops down. We got to break even. We've got a hurdle above, right? And then here's your maximum gain. That's way out here past 1,500. I have all that data right up here. So here's the data that you want to see. What's the risk? The debit, 437. That's your slippage right there, 25 bucks, okay? 5% slippage. Typical on a stock option like this with an August expiration date. But check out your max profit. It's over 1,500. Your max risk is 437. That's that's better than 350% reward to risk ratio. And then down here you've got your break even, which is 544.37. That's the hurdle that you got to get above by expiration in order to break even on the trade. Here's the information on the option, what you're buying, what you're selling. Here's your bid ask on each. And these move each day, folks. These will move. You can actually put this into a portfolio. You can follow it. You can chart it. We can run portfolio statistics on this as well. But there you go. Now, what else do we have besides price and risk? We also have volatility graphs. This tells me this is a great time to be buying out of the money call spreads if you are bullish on a particular stock because the volatility has dropped. Volatility has dropped in the entire market this year. I was looking at the VIX yesterday, and the VIX futures are down 50%. And that's after the reverse split, down 50% from their year-to-date highs. And I would venture to say you could see that in a majority of stocks. Take a look at this. Here's your Feb 10 highs up in the 30s for Costco. We're just popping off lows of about 15%. So that right there is very indicative of what's going on with the VIX. About a 50% drop in vol. That means your time decays off by 50% on options that are anywhere from that 30-day to 90 days and greater. That's part of what we're doing here too. This graph over here to the right, this is our Vega graph. So basically what this shows us is where Vega goes. If Vega were to move, if volatility would move higher, what that does to this chart. Okay. Now, as option traders, if you don't know, if you are pretty keen on volatility, you know volatility goes to zero at expiration because your wasting asset is gone at expiration. So we do see that, and we also see that that this volatility. See, if volatility stays the same, the red line is today. This blue line represents 39 days to expiration. The green line will represent 20 days to expiration, and the black line, which is always going to be vertical in volatility, is 0 days to expiration. The way I know this is because the legend's right here. It shows me exactly what these where these vols are. If volatility were to return to where it was at the beginning of May, what does that do to our trade? Well, if it does it today, and it won't do it today, but if it does it tomorrow, that pushes our profits out. That pushes us in the profit zone. So this is a very volatility friendly strategy for this particular trade. So what we've done is we've looked at some seasonals. We've looked at spotting an opportunity. We've verified it. We've gone and looked at an example of what I feel is a good example of a call spread based on all the data that we have in front of us. All of this is available right here at Tom's Option Tools. So so we've looked at, and I'm just going to kind of peek around and make sure that I've talked about the majority of this here. So we talked about backtesting. We talked about Darknet, Money Calendar. You know, let me show you some rankers that we have, some search rankers we have that are available on the options aspect of this. So if I were to go back to our homepage, and so a couple of things we have in options. Now we have some rankers. We can look at IV percentiles. Okay, this is one way to get an idea of whether let's take a look at the S&P 500. Which stocks of the S&P 500 have the highest implied volatility right now? Which ones have the lowest? And this we can go back, and right now I'm looking at 1 year. So Nike right now is showing the highest short term. This is the 7 to 30 day IV percentile. And so I can look at 30 to 60. I can look at 60 to 90. I can look greater than 90. This is all based on different options expiration, right? FDS is number 2. There's Carnival Cruise Lines, right? Everyone's worried about Carnival right now because they're kind of the dollar store of cruise lines, and they're highly leveraged right now. So everyone's concerned of, are they going to even be in business going forward? That's why their IV is so high. I don't remember what is pushing Nike. Nike's got earnings in 8 days. That's why. Carnival's got earnings in 5 days. So when you take a look at this, most of these high IV stocks have got an event coming up on them pretty quick. Okay. And so same thing, I can look at low IV, I can flip this to low IV, but I want to show you something that all of you in the room can have access to without doing a thing except logging on to this, your iPhone or your Android device. We have an app that's available even to non-members. And so it's something that's called the Morning Report. And so if you go and you do a search on Tom's Trading Room or Tom's Option Tools in the Google Play Store or the Apple iPhone Store, you can find our app. We have a suite of apps. Most of them are available to members only, but we have something called the Morning Report, which is down at the bottom of our apps. It's available to anyone. I want to show you what the Morning Report looks like on the software on the desktop. So our Morning Report will give us each day, gives us those top 10 most expensive options. Now, this is outside of the S&P. This is all optional stocks. So you can see there's FDX, FedEx is on this list. SIMO has been on this list for a few days. And here's C3AI. That's been a big mover in IV lately. But SIMO, let's take a look at SIMO for a moment. So this is Silicon Motor Tech. And as you can see, this stock has been recently as low as $52, as high as about 74, currently trading around 69, 66. It has earnings in 35 days, so the earnings are not like right around the corner, but the IV's been blowing up. and we could go in, and we have ways of being able to go in and look at news articles on this to try to determine why is the IV so expensive. But these lists come out every day. The most expensive optionables, the cheapest optionables right now. Looks like U.S. Steel is the cheapest optional stock out there. When you look at the 1-year high in implied volatility at 72, and the low is 39.92, and the current's 39.92, it is sitting on its 1-year low. And we can see that with 1, 2, 3, 4, 5, 6, 7. Looks like all of these top 10 are sitting on their 1-year lows right now. We also have unusually high call volume, unusually high put option volume, highest open interest, highest option volume on options. So we have all of that. Now, you could probably find some of these in different software, but you know what we do? We also have the ability to look at what stocks appear multiple times. So as you can see, American Airlines and Tesla are in 3 of these 6 lists. That might be something interesting to take a look at, okay? And so we have the ability not only to take these, but we can click on these, we can put them in a stock list, and then we can re-rank them. So for instance, let's say that we like the unusually high call volume area, and I see Tesla and I see American Airlines in there. All right. And I also see Activision in there. Okay. I see Bank of America in there too. Let's just take these 4. Now I'm going to add that. I'm actually going to put them in a group called my stock list. Now I've got 4 stocks saved in a list. What am I going to do with these? I'm going to run a searcher. And, we've got ways of running different option searches. We got single strategy searches, things like condors. We have something called a Matador, Tom. That's a modified condor. Straddles, okay. Sell puts. Do you sell puts, Tom?
Sometimes, yeah. Well, put spreads usually.
Puts. I love selling puts as a cash secured position. So I have an account that I do just cash secured puts on because I think it's a great long-term wealth building strategy. It's not a trading strategy. It's really an option investing strategy. But if you come down here, I have something called Double Finder. Now this is a trader strategy. Double Finder will look to find options that have the stock has to move the least amount to double in value. Now, what I want to do is I'm just going to take the wizard that we have here. I'm going to call it short-term doubles. And I'm going to look at short-term doubles on those 4 stocks I just put in my stock list. So what can we find? Well, it looks like Bank of America is going to be the best option that could double in value. And again, I haven't done any research on this, so don't go running and throw this into an account right away. All I did was I took some stuff off our morning report and I threw it in a list, and I said, well, off the morning report, those things that were getting multiple light ups, which have options that have the stock just needs the least amount of movement to double in value. And Bank of America is coming up, and American Airlines. Look, Tesla's down here at the bottom. It's not just because the price is expensive. We look at the percent of doubles on these. So when you look at the percent of doubles and the cost to close, American Airlines, this August 18th, 28 call option, which is priced at $1.67 right now, that has the best percent to double of just those 4 stocks. Now I can run this on anything, Tom. If you really like what's going on in the S&P 500, check this out. We'll run a percent to double on the S&P 500. And what you'll see is that Philip Morris, the stock needs to move 4.5%, and you've got a 95 strike that potentially could double in value. And all it's doing is it's just taking simple mathematics to determine this. Okay. So we've got that. How many of you in the room? We've got a couple dozen of you in the room watching this live. Do we have any put sellers in here? And you don't have to be a put seller on the really big stocks. Right now, I've got a dozen different puts in my portfolio right now that I've sold. And in fact, I'm going to take you to the searcher we have. I have a single leg strategy called sell puts. It's part of a hedge fund mastery that we do, but this is available to everyone who's part of our option tools, and I can run this. I run this on the penny and weekly list. So the penny and weekly list is a list of stocks that that are both part of the penny pilot option program, which is options that trade inside the 5-cent bid ask window, and those that trade weeklies. And so we'll run this scan, and I just did a search on it right now. So take a look at what's popping up right now. Here's Mara. This is actually not in my list. This is a $12 stock right now, $12.34. And this is telling me that if I go out and sell to September 15th, $6 put, I can get 41 cents for it right now for the $6 put. That's pretty insane right there. You're getting about 7.5% on your money, and that's on cash. So if I click on this, we'll get a little more detail on this. I'm pretty sure it's 7.33% return on your investment on a company where the stock's trading at 12. You have the obligation to buy it at 50% off, and you're going to get 41 cents mid price to do so. What kind of probability expectations are we looking at on this particular trade? This is one I might put on 91.1%. To sell the $6 puts. What has this thing been doing that's causing it to do that? Take a look at the chart. A couple days ago, it was trading at 9. All right. 1, 2, in 3 days, it's gone to 12.5. What's happening is these Bitcoin stocks, since BlackRock came out and announced that they're going to be, they're pursuing an ETF now and they're filing the paperwork. All these stocks were trading discount to Bitcoin or just going crazy. So, this is something that has earnings in 48 days. This is an 86-day trade. I might want to take a look at this, and I can even re-rank this. I'm going to do a re-ranking on this, and I'm going to re-rank it to 30 days. So I'm going to look at calendar days to expiration, 30 to 90. And then the other thing I could do, I could go in here too, and I could say, just show me, rank it by highest probability of profit or highest percent to break even. I have default parameters set on there because we look at something called the probability of profit, and we multiply that times the put credit divided by the close. Again, it's just a fancy mathematical term for we're looking for what's going to give us the best juice and the best probability of profit together. So Mara is something I need to take a look at. Let's see if there's anything in here that I actually have put sells on. I've got put sells on Riot. I've got put sells on Coinbase. I've got put sells on Sun. I've got I got put sells on Tesla. I've got Snap in my portfolio. I don't know if I got Roku or not. CCL, I've got that. I've had Upstart. I think I got back into Square again. And this list changes from day to day. But what's interesting about a lot of this list is that, there's a $6 put, there's a $7 put, there's a $7 put, there's an $11 put. And some of the best, highest probability put sells are in the cheaper stuff. Now, you got to take a look at this for yourself. You got to say, would I be willing to own this stock if it gets down to that price? But I got to tell you, the majority of these things, I think so far this year, I've had one stock put to me. Everything else is just expired worthless. And it's just one of the different ways that I trade. So let's see what we got here. What else do I want to show you? Anyone in here trade butterflies?
A lot of us.
Oh, I found something. All right, so let's take a look at some butterfly trades. And in our searchers, in our single strategy, I have butterflies. We have 4 different butterfly searchers. We got a butterfly searcher, we got a broken wing, we got out of the money, and we got modifieds. And so each of them have different characteristics. Butterflies are all, we have them set up as a 1, 2, 1 trade, buy 1, sell 2, buy 1. The broken wing could be a buy 1, sell 2, buy 1, but the strike prices are not consistent. One may be 5 points apart, one may be 10 points apart, etc. The out of the monies take you away from the stock price, so it becomes a bullish or bearish butterfly. And modifieds are a way of modifying the number of buys to sells, modifying the expiration you're buying versus the expiration you're selling, so a diagonal butterfly. And so that's what separates these different scans here. But if I were to go in, one of the ones I like the out of the monies on the bullish side. So I can go in here and and we've got all kinds of wizard criteria. Like for instance, I have my sell option strike distance from the stock close. I have my buy option strike distance for all wings. I've got search strikes that separate the legs. I've got low buy strikes, the distance from the sell side. You got tons of different ways to set this thing up. Calendar days to expiration, butterfly type as it calls, as it puts. How we will look at the quotes, the ratios of the buy side to the sell side. I can change this and make this 1-3-2s. I can set this up any way I want to. All right. And so let's go ahead and I'm going to go ahead and put on, I have one that's called out of the money call flies. And so I'm going to set that up and we're going to look at that with the penny and weekly stock list down here. All right, let's go ahead and do a search. And let's see what we get in terms of out of the money call butterflies, which would be if we're looking at a bullish environment and we're looking at bullish environment on the top optional, most liquid stocks that are available out there. What's it going to come back and tell us that, some ideas? Microsoft. All right, so Microsoft's trading at 333.74 right now. If we were to look at the 343, 400, okay, so these are 30 points apart. And let's look at simply at buying the wing here, selling the body times 2, buying the wing for protection. You're looking at a cost and risk of 324, maximum profit of 26.76. You've got, I know my days to expiration are 16 days from now. The days to earnings are 34. So this is a run on Microsoft where we could see this potentially move higher for whatever reason that we might decide, whether it's a technical reason, a fundamental reason, whatever reason, right? And then you can see the percent to double on this is very, very small move in Microsoft for that to happen. Here's Salesforce.com, and this will give me up to 5 different trades on the same stock. So that's why you see Microsoft in here a few times. Here's Meta. These are all options that are expiring very quickly, all right? I could change this within the parameters. I could go in and I could run that calendar day out and say, you know what, I don't want 5-day minimum. I want to look at maybe something that, is it going to expire in, let's say 15 days. That should push us out to that July, 21 days will put us out to the July options. And let's run that again. So we'll run the search, gives us a little bit more time. What is it going to come up with? We'll find out here in just a moment. What do you think so far, Tom? Just what
impressive. Yeah, it's good.
So check this out. Okay, here's Microsoft once again, but we're looking at the July 21st options, and we're looking at the 360, 394, 20. And so you got to remember, with Microsoft at 333, it still needs to move a good 7.5% before we jump into that call. Now, with something that goes out to July, I think that's more of a probable happening. But QQQ's right behind it is number 2. If you like the indices and the ETFs, Tom, here's a butterfly on Qs, right? This butterfly is going to end up costing you about 526, but it has the ability to make 23.74. If I really want to look at something that's cheap, I could click on the max loss and have it re-ranked. And so I can look at re-rankings on max loss. Here you go. So here's Palantir, excuse me, $16 loss, $134 max profit. How about SLV? If you're a gold and silver bug, there's a butterfly here on SLV. SLV's at $20.92. The 22, 24, 26 spread right now looks like you've got $6.14 that can make a possible 21.67, right? In terms of profit to loss. So that's our butterfly ranker. All right, other searchers we have, we got tons of them here. I've got covered call searchers. I've got counter spread searchers. I've got vertical spread searchers. I got credit spread searchers. And these are just single strategies. In the multi-strategies, we have a way that you can go in and run something called smart search. You can run find trades where you can put a stock in and you can say, give me the best trade on this stock that I believe is going higher. And it'll rate calls, call spreads, butterflies, etc. And then we even have something called Strategy Maker, Tom. And Strategy Maker allows you to make your own strategy, where if you've come up with your own strategy. Let's see, you've been around a while, Tom. Do you remember the TLJ trade that George used to put on. He called it.
Tarzan loves Jane.
Yep, yep.
Yep.
You can make those kind of trades in the strategy maker, and then you could save that and you can call it my TLJ trade. And it can run scans against all the stocks, as many stocks as you want, based on your own custom made strategy. So kind of cool. Now,
Very nice.
I have shown you guys a few things. I wish I could show you more. Like I said, I can be here all day long. I mean, I can't, but I could. I could talk all day long on all the stuff that our software allows and provides to everybody. We got massive amounts of data out there. We've got, if you're an option trader, we've got, stuff just if you like trading options and scans on options. If you're looking for strategies, both in fundamentals, in technicals, in contrarian, in seasonal, we have a handful of strategies out there that you can run back tests on, whether they're directional or non-directional. We even have what we call our partners and premium tools for those of you that want to, kind of shoulder yourself up against one of our traders and get access to their proprietary scans. The other notables I have is we have trade management in here. We have portfolios. Like I can run a portfolio. Here's a portfolio on a trade on a list of stocks back in 2018 if I wanted to revisit this again. And I could see, all right, here's what we started with. Here was the best that these trades did, that run up. There's the drawdown and there was the ends. So obviously green is profits and the reds were losses. But then we have the ability to look at the R multiples. We can look at distribution on these, and we can actually run not only a performance report like this, which shows us, if we collected trades and put them in a portfolio and then went back and did tests on this. And all my guys do this with their own particular strategies. Mike gave me a list earlier in an email today. And let me see if I can find it real quick. I'm gonna see if I can cut it out and paste it in for everybody to see. If I can get to it quickly. So Mike came back and we're trying to figure out ways of improving performance. We're always constantly doing that. And Mike is talking about something called credit spreads post earnings. So we're looking at credit spreads post earnings, and for some reason it's not coming up. I wanted to show you guys some of the performance stuff we had. It was phenomenal. Oh, wait a second. I might be able to find it. It's worth the wait, guys. All right, let's see if I can find that original email he gave me. There it is. Here we go. Beautiful. Okay, so let me see if I can find this. Wow, I can't. There's no way I can't even put this on one graph, but I'm gonna try to highlight as much of it as I can so I could show all of you. This is an example of the kind of detail that we can get into. Here we go. Let me just slide this over. You see that, Tom?
Yeah.
Okay. So this is Mike's trade analysis, and this is if you notice here, the latest trade he had was on Apple at 331. But then here's 1114. Here's a 424 trade. These are all opening trade dates. Then it shows me exactly where he started on day one, how good it got, how bad it got. You can see here this CCL trade. It was up $66. It actually went negative 154, but closed up $55. But this is something we're working on right now post earnings. Because if volatility runs up prior to earnings, volatility collapse post earnings, we have a particular scan that we're looking at post earnings with call spreads, put spreads, and iron condors. And we're looking at that and looking at the how that's performed back in time. But this is all something we can do, that we have the ability to do with portfolio analysis. So we have that. We have a full help menu. I mean, I've shown everybody, a lot of you are sitting here going, wow, this is like reading the Wall Street Journal for the first time. And I get it. A lot of our folks go and they gravitate into certain areas that work for them. But we do have a full help file, all right, and user's guide. We have a special guide just for Darknet. But we also have videos. We have free videos. And we started doing something this year where every Wednesday at 3 o'clock, we meet in a Zoom room, which is, we call it study hall. and this is for our members. And my team comes in every week, and sometimes we got our programmers there as well to talk about everything from how to create a risk graph, how to create your own scan, how to run money calendar, how to run Darknet. I mean, we just go through different topics each week, and we can go through an entire year of topics with this software. And a lot of people come and join us. A lot of our members come and join us, and some of them are there for the first time. Some of them get refreshers. But I'm telling you, we have a lot of support to build this up, to back this up, even how to contact us. And we actually do offer live contact for technical support. Okay. A lot of software companies don't do that. We're able to do that because we don't have hundreds of thousands of users. All right. We're a smaller firm. Trust me. And I was telling Tom this before we came on. I don't need the money. I don't. And this is not cheap either. I mean, we're running this right now. I probably pay about $500,000 a year between the programmers, the folks that keep this thing going, the site, and the data. It costs about $500,000 a year to keep this up. And so, if you do the math, you'll find out there's not a lot of dollars afterwards. When we're putting that kind of
overhead. Yeah.
Yeah. I mean, I kind of do this because, and especially the last 3-4 years, what else am I going to do? With COVID, what else am I going to do? I can't travel. Now travel's opened up this year. We're starting to travel next week. My wife and I are going to Scotland. We decided to pick a place on the globe that we've never been to. So we decided we're going to go to Scotland and do a train trip around the Outland. I try to do something during my birthday's next week, and so I try to do something between my birthday and July 4th and dial it down. But I love doing this. It's just something that I've loved doing. And Tom, you've known me since the 90s. I may have changed my look a little bit, got a little less hair on top, a little more hair in the ears. But I mean, it's just something I love to do. And so again, I will let everybody know this. Not only myself, but my entire team is getting up there in age, and we've had the hard conversation, and that is, what do we do next? And so we are in the process of merging with a company. And that's going to give us a better paint job, for sure, because we even though we've had this now since the 90s and we've been running it pretty much the same way, we want to have more 1 and 2 click scanning ability. We want the ability to have more interaction, live chat back and forth, the ability for me, Tom, to share a screen with you within our software. If you have the software on and I have the software on at the same time, I want to be able to share a link where you can open up my screen and you can see what it is I'm looking at, whether it be a chart or an option scan. So these are kind of the things that we're working on with this company in Australia. It's not going to be something that happens right away. I think the merge won't be complete until 2025. Because it has to be something that I'm happy with. We're not just gonna, we're not selling the company and running away. It's not happening. I'm doing this because, I see the age factor of most of my programmers, and they're good. But I want to be able to take all of the design that we have right now, put it into something that we call the software of tomorrow, and still give everybody the same type of scans that they're getting now, but on just a more interactive platform, and we're moving to that.
Right. Well, very cool.
So, any questions? Did I miss? Well, I might have saw some comments and stuff coming through, but I didn't see anything that I know Jay's in there doing, asking, or he's answering a lot of questions out there. But I know we've done quite a bit here in the last hour and a half now.
Yeah, it's been a while. I do have a link for people. You were kind enough to provide a free 30-day look for your platform. So I put that in the chat, and then there's a code ARROWTOM and that gets you the 30 days free. So really appreciate it.
How
It's a
cool
really
is
nice
that?
offer.
We've only done that one other time. I want to let you guys know. I'm not a big fan on free. We've done the stuff we've done. We've done some pretty not like 7 days for $7 or 14 days for $14. Because I've just learned there's a lot of tire kickers in the industry, and I would rather devote my time and my team's time to people who are serious. But we've only done this one other way. We've done this for our Optionetics students. So, for those of you that don't know, Optionetics got sold to Options Express back in 2009. And then in 2011, Options Express got sold to Charles Schwab. So I ended up being a Schwabby for a few years. And so then my contract was up. I left. I started Tom's Trading Room, and that was in 2014. In 2017, I bought Optionetics back, or the U.S. based version. I couldn't come to an agreement with them on the stuff that was in Singapore, Australia, New Zealand, etc. But what we did was I bought it back just to continue to educate the folks, the Optionetics students. And so now we've been doing that since 2017, and we do online education. We don't do the in-person seminars anymore. Every once in a while, I might do a cruise, and we'll do some sort of a trading cruise, invite people on a cruise. I haven't done that since 2020, so it's been a few years, and a lot of that's because of COVID. But yeah, when we bought back Optionetics. We'd already started developing Tom's Option Tools, and Tom's Option Tools has kind of been our de facto option scanner and options analytics package since then. But we've only done the free, we only offered a free 30 days to all the folks that had options analysis and that were part of Optionetics. So you should feel pretty honored, Tom, that we did a
Yeah.
30-day for, and it's really because when I heard the word option view, I said, oh, we got to give these guys 30 days. We do, because these are folks that have been with something that I was even involved in back then. So it just made sense to give you guys 30 days. Does it work on an iPhone? Well, it'll work on any mobile phone. I'm getting text messages like it looks like an emergency is happening, but I'm going to wait. But yeah, I mean, I'll show you example. So I just click on Tom's Option Tools, and let me log in real quick. For some reason, it's not. There we go. So here's Tom's Option Tools on my phone, and then I'm just going to go ahead and click on, because it's the password saved in my phone, and I'm going to click on login, and there you go. And let's flip it this way so you can see it's literally the same thing. And I can go in and I can run that. Now the app that's available with it too will for our members will do the morning report. So we've got some apps on there that are with publications, because we also publish through a company called Money Map Press. We do some exclusive publications for them, and we also run some scans for them. But any of you that want to also take a free trial, I would say take the free trial that Tom gave you, because that's a free trial to absolutely everything that our subscribers get outside of our partners. You can click on that free trial, and you could take a free trial on the option trader. You could take a free trial on the contrarian trader. You could take a free trial on the complete trader. You could take a look at all of that. You can't do that on the phone. The phone only offers the ability for anyone who wants to try it free, the morning report. But it does work on a phone. It works on an iPhone, works on an Android device, and it's our mobile phone design, so that it's designed to really try to work within the confines of your phone, the size of your phone.
Makes sense.
So Aramir Tom is your promo code. I would suggest cut it, putting your mouse on there, double clicking and copying that. And then pasting it into the link that Tom has provided for you.
We've also got on the member site a deals and discounts page, and it's on that page. So if you forget or you come in later, just go to that page and you'll be able to get it.
Yeah. So guys, check it out. And I'm sure there were many other folks that couldn't join this live event today. So those of you that are watching the recording, this is also for you. And I believe, I'm not sure, depends on how you set up your Zoom webinar, Tom, but they should be able to see that link and that promo code. Otherwise, I'm sure you could put it in the email for everyone as well.
Yeah, it's in the chat, and on the member side, I have a library, and I'll put a link in that library too, so it'll be easy to find.
Awesome. So I hope you guys enjoyed this 90 minutes. Like I said, there's no way I could have got through all of this, and I probably left a lot of holes in here that you can check out and see what's going on. Like I said, I'm not a programmer. All right, I'm a trader who hired programmers, worked with programmers to develop stuff that I use in my everyday trading. So, and the rates after the trial, they are the rates, the lowest rates possible. I think we passed those low rates on to you, Tom, that you're giving to the subscribers, correct?
I think so. Yeah,
Yeah,
I don't think,
it is the lowest rates that we've ever offered. So they're on they're on the list. I'm sure Tom can get you that information, and that's it, guys.
well, Tom, it's great to see you again, and
You too.
sounds like you've been keeping busy, and really appreciate the offer that you made to the community. So thank you so much, and great job with your presentation.
Absolutely. Absolutely. And thanks for having me on. And guys, like I said, if you have any other questions or so, if once you're in the software, there's an area you can contact us in the help area. You're welcome to contact us with any software related questions, and either me or my team will reach back out to you and be happy to answer those questions for you. All right.
Fantastic.
Thank you all
Well,
very
again,
much. Have a great
thank
rest
you, Tom.
of the day. Thanks.
You too. Thanks.
Tom.